Trouble is brewing in the country's sugar sector as Kenya moves ever closer to the March 2014 deadline that will see the COMESA safeguards protecting the local sugar industry lifted and the market exposed to cheaper imports from across the globe. Now, despite winning 2 extensions over the years in the premise that players in the sector needed time to prepare for the onslaught of cheaper sugar, the country has made little headway towards modernization of the sector that has remained firmly rooted in the past. But what will happen once the deadline lapses? Karanja has the answers.
Kenya's sugar sector is at a crossroads. March 2014 will see the end of the COMESA safeguards, leaving the local sector exposed to cheaper imports from across the globe. But while this has been a well-known fact, little has been done to give the sector a fighting chance to stand up to the competition. The sector is already feeling the pinch from cheap imports from Uganda and Tanzania. The cost per ton for Kenyan sugar ranges between $415 and $500 US. Compare this to the $140 and $180 range Uganda exports its sugar, or even the $180 and $190 range from Tanzania, and one realizes the local sector is greatly disadvantaged. The troubles for the Kenya sugar industry are linked to the high cost of production, stemming from dilapidated machinery and high cane prices. On average, it costs $600 to produce a ton of sugar in Kenya, while in Uganda it costs as little as $140 and $200 in Tanzania. There are fears that opening up the sugar sector to competition before it's fully prepared could bring the industry down to its knees. It's for this reason the government has been seeking an extension of the COMESA safeguards. Sugar mills have delved to other revenue-generating ventures to grow their business, but with little success. Mumias Sugar, for instance, which is listed at the Nairobi Securities Exchange, derives most of its revenues from sugar, with the byproducts such as ethanol and electricity generation only accounting for a fraction of its sales. Mumias shares are down 13% since the start of the year, currently trading at 3 shillings and 95 cents, painting a bleak picture of what investors think of the sector. Future success of the sector is linked to consolidation, with farmers forming cooperatives as found in a report prepared by Kenyan officials following a case study of the Indian system. Whether this will offer a lasting solution to the current woes is yet to be seen, but will be a step towards reviving the sugar industry. Karanja, KTN Business Today.